Many of you are asking me for an update on ASML stock. The stock went down 8.5% in one day. It doesn't really happen very often, and it's really a very weird dip on the stock. I believe it's some type of an overreaction. I'm going to tell you why the stock went down. I'm going to talk about the fundamentals and the reason why, and try to see if it's justified and talk about the valuation and everything around the company in general. But just to give you a quick overview, I always like to say that ASML to me is like the toll bridge to the semiconductor and to innovation, to tech in general. So if you want to bet on smartphones, on quantum computing, on anything related to AI and data centers and all these things, you can bet through all of them through ASML, as semiconductors are expected to grow at a 9% CAGR, and ASML has those AUV machines, and those machines are used in the process of manufacturing semiconductors, and it's a patterning process where they pretty much have a 95% market share, as you could see here. So they have some kind of a monopoly, and they're expected to be like 10 or 15 years ahead of competition, and no one can pretty much match their technology. So they have a monopoly, one of the few companies that actually have some kind of a monopoly in the world. And this monopoly is likely gonna last for a very long time. And it's a very beautiful, high margin, most of it recurring revenue business model. Now, looking at the quarter for ASML, it was actually a great quarter for the company. Looking at net bookings, which is mainly their backlog, 5.5 billion. It was a $1.3 billion beat. They also increased their sales by 23%, which was also a beat. Gross margins, also they beat, which was 54%. Operating margins, 35%, massive operating margins. Earnings per share, they also beat by 75 cents, and they even guided for 2025, 15% year-on-year growth, which is pretty impressive from a company like ASML. Again, guys, I am very impressed. Now, the truth is, why is the stock going down? And this is because of one single comment, just one comment that the CEO and the CFO have made. And they said, looking at 2026, we see that our AI customers' fundamentals remain strong. At the same time, we continue to see increasing uncertainty driven by macroeconomics and geopolitical development, such as tariffs and other things. Therefore, we are still prepared for growth in 2026. We cannot confirm it at this stage. So they pretty much cannot confirm that they're actually going to grow in sales in 2026. This is a very big statement, and it sent the stock down 8.5%. Now, I believe this statement was misinterpreted by the market, and because the way I'm looking at it is, there's only two main causes for them to say that. The first cause would be that there's actual slower demand happening, but we're not seeing it from companies like Taiwan Semi, which is their largest customer. We're not seeing it at all. We're not seeing it from Samsung. We're not seeing it from other semiconductor-related companies. We're not seeing it from other chip companies like AMD and NVIDIA. We're not seeing it from anyone. Everyone is talking about massive increasing in chip demand over the next few years, and ASML will benefit from that. So why would they experience slower demand in 2026? I'm not really seeing it as this being the reason. Now, the second reason that it could be, which a lot of people are talking about this reason, is that they're doing it on purpose. They're lowering expectations to lower the valuation of the stock for them to be able to continue doing buybacks, as the company has been buying around 12 million euros pretty much every single day, as they've been doing it for a while. This is their share repurchase program. They upload it every week. And every week, every day of the week, they've pretty much been buying around 12, 18, sometimes 20 million euros every single day. And they've been doing it since like February or January. So it's been a massive buyback program from ASML, and it's been amazing. Now, in terms of the price action on the stock, I believe some of it is justified, because to be honest with you guys, ASML was trading around 31 PE. I mean, when you have a company trading at 31 times forward earnings, and the CEO comes out and he says there's a possibility that we might experience 0% growth in 2026. Of course, the stock has to go down. So to me, the reasoning is kind of unjustified in terms of the statement being misinterpreted, but the way it was shaped by relative to the PE ratio of 31 times, I think it's justified. I think the stock deserved to go down. I just believe it did. And now at 27 times earnings, the stock is much better valued, much more reasonably valued. And I believe it's now presenting a pretty good opportunity for a company like ASML with a very wide moat and everything, for a company that has around 25% return on invested capital, for a company that has around 30% net income margin. It has been pretty much rising every single year and is expected to reach 35% net margins by 2030 as they've been raising their prices every single year and becoming more and more efficient. The company has grown earnings per share at a 22% CAGR since 2014, so over the last 10 years, and the next 5 to 10 years will likely also be around 18 to 20%. So you could potentially get around 20% earnings per share growth easily if they grow 15% in revenues and they continue buying back 5-6% of the shares outstanding. You can get 20% in earnings per share growth. So 20% in earnings per share growth for 31% net income margins, high return on capital, some kind of a wide moat company at this multiple of 27 times, this is not expensive at all. I think the company right now is finally reasonably valued, but at 31 PE, it was priced to perfection. And I can really understand why whatever happened, happened. And now it's, to me, it's looking much, much better. Now, the only risk is that you have to always keep in mind is the whole shipments to China, because 27% of their shipments are still going to China. And if something happens in the future, they can no longer ship to China due to some kind of regulations from the United States. They are imposed on ASML, even though it's in Europe, but any kind of pressures on them shipping to China could cause them to lose a lot of the China revenues. And it's been going down over time. It used to be like 43 or 44%. Now it's 27%. And it's expected to reach 14% over the long term. So it's going down and it's factored within guidance. But I would like to have seen it gone down a little bit more than 27%. But I believe we're going to see it come down a little bit more over the long term. But this is the main risk with the company. But I still believe ASML at this price, it's very attractive at 27 times relative to the fundamentals and relative to the overall market in general for the quality of the company that you're getting. And that's just my analysis on ASML, just my quick opinion, nothing too crazy, no deep dive, just my opinion. So I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.